Hello and welcome to this weekend's gold chart analysis video. Today's date is Saturday, the 15th day of March 2014. My name is Derek, and this video is multiple chart analysis of gold. So 4 different time frames. The first one, this one is a daily chart, which indicates that one of these periods, that's either green or red, is one day. Green is up day, red is down day. There is 100 total periods within each of these charts, so this is essentially 100 total days. The next chart we'll take a look at is the 8-day chart, then a 40-day chart, and then a 117-day chart. Those will be the 4 time frames that we'll be going through. A lot will also be talked about this 18 average band. I find it to be very helpful. It's front-weighted. It's the 18 average of highs, lows, and closes. And when I'm looking at this, say we're going the down move, what do we need for this thing to reverse? Well, the band has got to flatten out, like it did here, break above the band, establish resistance, well, it didn't do that in here, come back to the band and then break it. So back here we're saying, okay, it's got to go higher, back to the band and then break. And then when this occurs, the band would be rising. You're in a bull market. Didn't happen in here. And then in here, you can see it got above it, back within it, and it broke this resistance in here, but it didn't really have that large of a break above the band. It's still decent, but since then everything has been going well to the upside. Something else to point out too is this low in here. Notice this low took out that low, but it didn't stay down there for that long. So lesson, or what I'm trying to state, when you have a reversal move, it is very common for you to have what I call a failed move. This was a failed move to the downside, and oftentimes failed moves create fast moves in the opposite direction. Well, that happened. What else do we see about this? Well, let's take a look, and I'll be doing this with every time frame. 2 periods where the highest price is above the 18 average of highs, as well on the polarity level, 2 periods in a row where the highest price is below the 18 average of lows. So starting here, this is one situation where 2 periods below the 18 average of lows and a little bit of a downtrend occurred. Happened again here, but nothing more occurred. Of course, that was the area of the bottom. 2 periods on the upside occurred in here, which obviously started a rally. Again in here, continuing the rally. And again, the final day. Of course, I'm not going to state what's going to happen because it's still got to happen. What else do we have here? Fibonacci retracement, which I calculate using high divided by the low. Different calculation than you're going to find on the internet. To the power of Fibonacci percent, or to the exponent of the Fibonacci percent you require to use. I'm using here 76.4, which is this line, and 61.8%, which is this line. And then, of course, you multiply this by the low. That's how I calculate exponential Fibonacci retracement. Now, within this, an interesting concept is if I know the distance from here to here is a 38.2% retracement, what would a 61.8% be? Well, it would be the same distance from here to here from this low. So therefore, I can calculate it by going like, let's make sure I get the exact level if I can, and then move the box that I just made to this low. So I know for sure that current 38.2% level is right there. Now, when I'm looking at these uptrends, what helps me determine possible levels for where this might go? Well, one, you got this upper band, which is currently 1411.93, 1412. But this thing is always moving. And as markets go higher, the upper band can only do one thing, and that's go higher. So you'd even have to think about 1420. But what I like to use is, okay, here we got this line here. It's the key 61.8% level. Now, I would predict that this line is going to end up at a key level. And 1305.36 is not a key level. This area in here, well, it's a key level, but not here, which is giving me reason to believe that there's more room within this current uptrend, and Friday was not the top. Now, the 38.2% level, if I were to make an educated guess, somewhere around there. Now, if this level happens to be 38.2%, that means the market would have to go higher. As the markets go higher, these lines go higher, and this line would move up to about here, and that top would be about 1422, which is a fairly significant level for we're going to switch the time frame now, because that's another way of indicating possible levels. And we're going to now go to the 8-day chart. Each one of these periods representing, well, 8 days. And this line here, Fibonacci retracement from this high and this low, is set at 1420.94 or 1421. Also a move up to that level would make the pattern of a double bottom. Forwards where you go down to some point, you go up to some point when that was 1420, back down to its previous level, and then back up to 1420. That's what I would need to see for a double bottom formation. With that being said, 18 average band. For me to see this go bullish, I need to see this thing flatten out, break above it, and establish resistance. Well, it kind of already has, but it really has to break above here when it's all said and done. Come back to the band, and this band would start to go higher. There you go. And then when you break out above it, that is when you can say that time frame is in that of a bull market. Now let's again talk about, well, two periods above the 18 average of highs and below the 18 average of lows, like we had in the last video. Okay, you can see in here that it was either here or here. One of those days it was above it, but it was an area where it topped. When did it do it again? It did it here. What occurred here? Well, it was looking as if this trend was going to be coming to a completion, or the sideways trend, and well, it did, but it obviously went to the downside. For there was, however you want to draw it, you got this one. There was all of these symmetrical triangles in place. It broke it to the upside. Failed moves create fast moves. This turned out to be a failed move. Now notice in here, this was day number 2 of below the 18 average of lows, which set up a large down move, just as we have now 2 periods above it. With that being said, if you were to tell me in here, what do I need to see this bearish, and we're pretty much around 1800 gold, and I would say, well, it needs to come back to the 18 average band, where the 18 average band has to flatten out. It has to break below it, establish support, then come back to the band and break support. Well, support was established. So you come up to this band, didn't break support. Come up to this band, well, it didn't break support, it went higher. But in here, as it was just doing a bunch of sideways nonsense at that time, we can see in here that, well, it was testing that level. So to state that there was a large surprise when this support level got taken out, that it went large to the downside, well, it's not a surprise. It occurred. So I'll say the same thing in here. Again, as I've already said it, but it needs to do what I stated all so many times. Come back to this band and then break higher. Now, it doesn't always do that. For if it just keeps going up and it makes it really to the mid 1500s, and that's extremely improbable to occur, well, then I'll state it's bull market that way. But again, that would be unlikely to occur. When you do break above this level, The next significant level of resistance, right in here, at 1594, which we can round to 1600. Let's switch the time frames again. Let's now go to the 40-day chart. So what we've been looking at before was in here, 40-day chart. Well, uptrend from here to definitely here. But the question is, within this uptrend, is this a top? Because we're already now in a declining 18 average. The answer is maybe. It will be if there is a long sideways correction or this thing goes down lower. If this is a failed move, the likely scenario is a fast move to the upside. The amount of time which this band would be in decline would be very light, and the trend would never break at that point. So we'll wait and see if, of course, this is the key top. But it's twice hitting the 76.4 level of 1189. And now let's take a look at 2 periods where it stayed above it, right here. Then you got 2 periods right here, 2 periods right here, maybe even again here, 2 periods going down below the 18 average band on this point. It's always something to be aware that, okay, I'm looking at this move now, so it's the only options that can occur is some sort of nasty sideways correction. Oh, we'll see a nasty sideways correction on the next chart, but that's where you go sideways for a sustained period of time. Number 2, reversal in trend. So I need to see this thing flatten out, break below, establish support, come back to the band, which it's pretty much doing now. I'd like to see it go up a little bit higher, and then break support. So on any significant break below 1189.02, something that holds there for a couple of months or has significant breaks below, well, then this trend's reversing at the same point. If you see this thing breaking higher and it's in this upper range here in the high 1700s, low 1800s, well, then I'm going to be saying, heck, this is a failed move. I'm going to be expecting this to break well past that 2000 variable. Some different chart analysis that I like to consider. The final chart, 117 days. Although the final period is only about 1/3 of it in, about 30 something, 35, 36 or so, 37. This is that violent sideways correction. So the move was up from here to here, sideways, and then up. Those are the only 3 moves that have occurred. Fibonacci retracement that I am using is from point A to point B. Now, I could use from here to here, but I already showed that in the last chart. I could also use from here to here, but there's no signs of this going down any further. So how would Fibonacci retracement be good for now? Obviously, it found support here, but why would it be good today using the lows of 35 from the 1970 and the highs of 850 from 1980? Why would that be good? Well, currently, it's 115.2% of a retracement from this low to this high. I expect it to go to 161.8%. That's a long ways away. It has to almost triple to get to that point from where we are now. So therefore, with that being said, let's also take a look at 2 consecutive periods above and below the line. You have it here, uptrend. 2 consecutive periods in here. Well, it went lower, but also notice this. Let's draw a straight line in here. This twice hit support level in here was breached below, failed move, fast move. Continuing on, 2 consecutive periods above it here, and it never even touched the band until now. And this is period number 3, where it's correcting currently through the 18 average band. So again, you start to see this thing start to rise. Why would you not expect this thing to continue to have significant gains towards the upside? Okay, I'd like to thank you for tuning in. Remember, 2 videos this weekend. The other one, the daily chart on silver, as well as its mint statistics. So there's 5 different charts that I'll be showing there. Thank you for watching this video and have yourself a magnificent weekend. Bye-bye.